Good morning. My name is Scott Redler, the Chief Strategic Officer at T3Live.com. It is Tuesday. We are in the second day of the week, and we started off with a bit of a risk-off feeling. Last week into the jobs report, markets had a huge move. I think the S&P was up 12, 13% heading into it. Then on Friday, with a hot number, it seemed like the market took it in stride, which it did. And then yesterday, selling came in, pretty fast and furious, and didn't break the market. But a lot of those accelerated trends that we were following, where momentum was tight, where they weren't letting shorts out, longs in, broke a bit yesterday. So then the trade changes, which the trade always does change. Looking overseas, Europe's on the second day of its controlled pullback. If we look here at the HEDJ, which is a proxy for the DAX with a dollar hedge, you did get a break below this small ascending channel here. So at this particular point, we'll see maybe, this little spot is buyable, okay? If you didn't buy it when, it engulfed this small pivot and gave you the gap up to trade against, or when it broke above this 58, dips are good. You don't want to chase things. So I would say for the HEDJ to be any good, or for you to think about where you could buy a dip, somewhere around this, 60-ish, 60.50, I would think could hold. Your pivot to write down is 61.02. So if it happens to break below 61.02 and come back above, maybe that's your way to put on some, risk in Europe. But as of right now, this accelerated trend broke. So, you could see a little bit more downside. So, I would be patient. As far as Asia's pretty mixed to the downside also. It seems like Japan, could definitely use a break, 5 up days. It's a bit tired. The Shanghai also got to one of our targets. We talked about this 3,800, in the what's it called, in the ASHR, or in the overall Shanghai. This is when you had one of your trends that did break, okay, which was the starting of the year, and then obviously this is when the Shanghai was a huge obsession, when you had the big crack, bear flag, continuation lower, and then since this small symmetrical triangle broke to the upside, it's been a non-event and it's been trickling higher. But into this area, I think you probably want to be trimming it versus adding it. But overall, you're not getting many headwinds, the way we did a month ago out of Asia, because usually that happens when things are breaking levels and volatility spiking, et cetera, et cetera. So you come to the SPX, which we chart every single day to talk about how to actively navigate it. You have your bottom from August, your double bottom with the red dog reversal. Then you had the lower pivot taken out showing power. Then resistance got cleared and retested, and then it's been above the 8-day, ever since pretty much October 5th. So for the first time, okay, since October 5th, you then got a close below the 8-day. So what does that tell you? It tells you the speed and the trade changed a little bit. And every time it touched it, it rallied, touched it, rallied, touch it, rally, touch it all the way up to here. So now for the first time it broke below. We're now down basically for almost 4 sessions. The oscillator is not oversold though. It's basically flattish. So now we'll see if there's a trade today around yesterday's low. Yesterday's low is 2,068. Then you have the 21-day and another moving average right there, a little bit closer to 2,062. So for today, what I'm going to be looking to see is if we could get some kind of either, it holds yesterday's low, or it breaks below, comes in, comes back above, to get some kind of red dog reversal. But as of right now, we are now on the right side of this accelerated trend. So you never know how far it retraces. So for me, I'm going to write pivots down every day, and here is your pivot in the spiders. Let's see if I know that if this is the right Fibonacci retracement. Because if you go from low to high here, let's see if that's the one that I use. Nope. Okay, let me see if it's this one. Again, these are some tools that I like to use. Oh, here it is. Sometimes you go from low to high, and really the 25% retracement, which still is deemed a very fast market, comes in at 2,053. So if you were crying about this small little retracement yesterday, you better get out of the business or stop crying, because here's 25%, and the 38.2, comes in, which is still deemed a very strong market at 2021. So this is just, the start of potentially a bit more of a two-way trade, and who knows how many sessions it goes. It could go for a week or two. So as of now, we'll trade intraday, and we'll try and be very tactical. Here's your spot on yesterday's low. So if you want to take a quick snapshot of that. And then if you want to think about the same thing, it's the same thing for most sectors. Trade versus yesterday's lows. In order to go much lower for the bears to roar, you got to get below a low and stay below a low. So we'll look at the strongest sector is the Qs still. Okay, finally a bit of a retracement move. So at this point it also gave up the 8-day, but the 21-day comes all the way here, which is where the gap is from almost a few weeks ago. So into this spot, perhaps it could be buyable. But for right now, the only point of reference you really have is this low here, which is 112.86. So if you break below that, come in here and come back above, maybe there's a buyable dip. But again, be careful. Look how far we came. And if you draw a trend line like this too, all it did is break the accelerated trend line to change the speed. And now we'll see how long it stays on the right side of it, during the retracement phase. They go to the Russell, which played a little catch up. We'll see what looks like it needs to hold in order to retain some momentum. Here's I would say support 1. Okay, this is your high level area. If this were to hold this 117.27, I would deem it very strong. But the same way it broke out and came into the 21-day, you might see that again here. So with that being said, if we break below this, then I would look to see if this 116.30 holds. I'd probably be giving it a try right around there also, and you probably even draw this little line here, and that's a decent spot to see whether or not you could buy that dip, especially if you missed when it broke above this area and gave you a nice little trade. The bios tried to show a little relative strength yesterday. Not much to go on here also, except for it did go green. Well, most things did not yesterday, holding the 21-day already. So if you're in the IBBs, trade versus 323, and if the market were to go green today, maybe you get a little extra push if this gets above 332, and then the prior highs here are closer to 340. So not much to go on there. We did talk about, if the market were to break the accelerated trend, you'd probably have to see some of the banks that were so strong Friday get into those gaps, meaning that they were a little bit overdone. So you look at the XLF. The XLF, gave back pretty much the entire gap from Friday, so it showed that was a little extra motion there. So you call that an exhaustive gap versus a new pro gap. It's been in a big move though since the lows. So at this point, you probably don't want to see the XLF get too much below this 24.32. So see if this holds. Maybe you could buy versus that. But again, you have a trend in here where you don't want to see this break. And if you do see it break, what it means is you could retrace. And then the question is, where do we play? And we play the retracement game, etc. And then now, since earnings season's somewhat behind us, we're not going to be getting such movement and those kind of reports. So that's why we're going to have to be listening to Fed speakers. Isn't that fun? So we just got to figure out, if you sold strength last week, where potentially could you buy some back, or are you just going to trade? I did try and hold some kind of swing longs during that rally, and then on Thursday before the Finance Festival, tweeted out I am done with my swing longs, and I even came up with that gun to head saying I think we see 207 before 213 if you wanted to take a position into the spiders long or short when I was leaving, because I wasn't going to be around for the big event. Unfortunately, I did not hold short, but I guess it's better than being in 6-7 swing longs. So let's just move on to see how maybe we could re-enter some of these trades. So this morning I was sitting on my desk and I saw Apple down like $1.80, and I wasn't sure why. Some are saying that there's some channel checks showing some softness. So as of right now, it is below this 120 pivot. Okay, I see the next real support here coming into a little bit closer to 117.75. So if it were to see this fast, maybe I'll look for a general buy the dip. If you're in our VTF, you know that Apple, that was on the VTF for a decent trade since earnings, was sold around 123. Anyway, sometimes you get lucky. Now we'll see if we could buy it somewhere around this 117.75. I'll let it put that quick spike low in. I'll maybe trade versus that, and then if it were to break, I'm going to have to get out of the way. Hopefully, Apple does not break this trend, because that probably would become a headwind for the overall market. And Apple was kind of fun to trade when you could have bought it on the day of earnings, and then it went green and traded above 119.30, and then we had another nice trade above the 200-day. So it's good when things are methodical, and for me, I like it when it's Apple, because I tend to feel more comfortable taking bigger tiers. But anyway, we'll see what happens, if someone disputes it or not. So that 117.75 I think is pretty important. not much to do in Google and Amazon. Both had tremendous runs. They're trying to hold higher. You got to be careful. This is your Amazon best in breed. Held the earnings gap right there if you were long. Took out the earnings high right there for a trade. And now I'd say see if it could hold the 8-day moving average, which some things are breaking. That stands right here around 630. Google also same type of story. Not really a setup here. If you want to try and buy a dip and you can handle it, be my guest. This too, the best way to have traded this was the day after earnings when it didn't fill the gap, perhaps buy versus it, and now it's trying to hold the prior earnings print high. So see if that continues. If you're long, be long versus 749. If it breaks 749, take a little care because there is an air pocket here, and if you're looking to short it, I guess this would be a spot that if it breaks and closes below, you could see a bit of a retracement. So if we start seeing some of these, the chosen ones start to break upper levels also, I would be very careful just overall in general that, you don't want to buy too shallow of a retracement in the overall market. Tesla had a quick move lower, this name that looked as if it would be repairing a little bit, holding the earnings gap at this point remains to be seen. We'll see what happens, I guess, here at 224. It already pretty much lost the momentum that it had after earnings, so see if that continues to come in or not. Stock's been broken, still below all the moving averages. Did get an oversold bounce on that, the earnings report, but still, very broken, not at highs, below the downtrend, below all the moving averages. So, see how this pivot happens. If it shows relative weakness today, maybe you get a cute short, or if it breaks below, comes back above, maybe you find some kind of red dog reversal long. Just tactically approach it because, that stock has not been a trending stock to the upside for a while now. Then as far as social media, Facebook, which hit a high after earnings, has been pulling in. It's pulled back 3 days. Usually you don't get more than that in Facebook. So I'm going to be focusing on this today to see whether or not I could buy the pullback. I did have options into earnings, and I sold it the day of earnings. So now, I have the luxury of trying to buy into this area. Probably don't want to see it get too much below the prior high here. This is 105.12. Okay, so hopefully we get some kind of reversal into the 8-day moving average where it breaks below, comes back above, and you could be long it for a swing for it to then resume its uptrend. If it starts breaking much below 105 and closes below it, then all of a sudden, some momentum, will probably leave. You could draw a trend like this also right here. So coming into this spot, if you sold strength, I would think you focus here and maybe we get a good little entry there. LinkedIn's been acting pretty well since earnings. If all the high beta starts to break down a little bit, I would take a little caution. Here it held the earnings gap. You had a small trade there, and now it's holding sideways. And it looks like if the market were to go green today, this is something that could be on the top of your list. As far as bios, I don't see many of them that look so high-strung or decent. The CELG looked like it was going to break out and fell apart, so you had to act fast. GILD still looks good, so maybe this could be on your horizon. But again, you have to be very careful. This has to hold for it to be in the game. So this is 106, and if it were to take this out, maybe it gets a trade there. But it's a whole lot of mess here. You need heavy volume for that to be the case as far as that's concerned. Citron, whoa, what a powerhouse, huh? Another release yesterday about this time MNK, that it could have some problems. Stock that's been already broken. Just so you know, a lot of these names are like, if you feel like you're getting, bagged with them. Okay, look when this trend broke right here. You had a big upper trend. This is when momentum traders probably said this stock is over with, I'm out. Then you had a wide range bar. Then what did it do? It went below the 200-day and it stayed below the 200-day for a lot of time. So that showed you it shouldn't even be an investment. So here's where it lost momentum. Here's where it lost a 200-day. Here is when you had follow down selling, and then you had follow down selling. So you shouldn't have been in this as an investor as it is. And if you caught the news quickly as a trade, congratulations. I'm not sure what it's doing this morning, but here is your pivot there. You look at Valiant, the same kind of thing. Well before Citron, this, what's it called, trend broke. If you want to even go all the way back here, this trend broke right around there. Came back up, retested it and failed, and then had an outside day here. So many sell signals, and oh, look what a quinky dink. This is when it broke the 200-day. You could have been out here as an investor at 200, not in it at 85. So got to know how you approach these things. If you're active and intermediate, that's one thing. You get out when they break the 8 and 21 day. If you're an investor and you give things room, you know, that 200 day is pretty important. That tells you when macro institutions are saying, bye-bye. So now oil's up a little bit. It's been leaking recently, so see if that holds. You go to the USO here, and you know, it's right back to the lower end of the range. So you know, this shouldn't hold here. If it doesn't and starts breaking below this, you know, that also will raise some volatility, and you know, it will probably deepen the retracement that we just started a little bit into later last week. So we'll see what happens there. And then if you go to the XLE, it has had a you know, a few day pullback here. So coming into this probably is a spot that you might want to look at to see if it holds. That's around 67. So if you bought into this and sold some strength, you know, you have the luxury of checking it out here. And this is your 2-day pivot to see if it wants to break below and come back above. That's 68.82 right there. So, you know, with all that said, I think the technical theme is that pent up, not let you in, not let you out type of trade that was following that accelerated trend did break. So at this point, you know, I think we're 2% off the highs of last week, you know, after running 13. So there is some room if they want to go a little bit lower. I showed you the retracement rules in the S&P. We'll figure out which of those levels, you know, could be tradable for a trade and which ones might be tradable for a swing trade to build. You know, we'll see what happens with Apple today. It was down $2 when I went in here. We'll figure it out if that weakness is contained or not. You know, the high beta names are still very well elevated. If they hold higher, it's going to be hard for, you know, the market to really come in. And then the banks that filled those gaps from Friday, we'll see if they find some support. And we'll try and connect all these dots and figure out whether we just want to tactically trade both long and short, or figure out a way to put on, you know, a bit of a portfolio approach for a move back up into last week's highs or beyond. But at this point, we still don't know. So I would just, you know, be patient and make sure you have calculated entries, and then also honor your stops. Have a great day. I'll see you soon.